be the place that the Fed can hang its hat if it wants to lower rates. What are your thoughts?
Yeah, so this was an excellent report. Take a step back, though. I don't trust the BLS labor report, right? We've had like 24 out of the last 26 months have been revised lower. And we had these series of, during the previous administration, where you would have a headline number that beats estimates only to be revised by the third revision to be lower than the initial estimate. Something like a 11 or 12 standard deviation when that happens 10 times in a row. So I don't know what's going on in the Bureau of Labor Statistics. I don't really trust a lot of the government data. First, it's hard to collect data, but second, with the way the economy is changing and the way they collect this data, it's survey data, right? So you're using the phone to call employers of 50 or more people, and you have a rolling sample of 50,000 people throughout the year to judge a labor force of 165 million. Okay, that being said, if you look at the ADP and all the other, and the JOLTS, this kind of jives. Like, we get a little bit of a spike here, and I'd say the ADP probably looks a little bit dour to what we're seeing in the GDP reports. And I don't see a labor market that's exploding the upside, but I clearly don't see one that's falling off. I think the good thing here, though, is the wage growth. What were we, 3.7% year-over-year growth?
0.3 per month.
Yeah, and so you compare...
0.4, excuse me. It was expected to be 0.3. It came in at 0.4.
But if you look at that year-over-year, where inflation was like 2.6, 2.7%, you're gotten like a 1% real wage growth. That's the type of numbers that we need to see over and over. And I tend to think that with this AI, you're going to start to see a labor force reorganization. You're going to start to see a lot of job tightness and wage growth in the trades industry as we really start building out these data centers over the course of the next 12 to 24 months. And then manufacturing really start to kick into gear with the effects of the big, beautiful bill, endangerment finding going away yesterday. So I'd expect this labor force, this labor numbers to get much better. And then as you tie that back to the Fed, short-term rates are coming down. If you follow Trueflation, EJ Antoni, who should be running the BLS, is a big proponent of it. Scott Bessett was discussing it this weekend with Maria. Okay, they track 1 million real-time data points. They're tracking year-over-year inflation around 1%, not this 2.6, 2.7. Okay, so inflation and the government, historically with the way Trueflation tax and the government data, they're 6 to 9 months ahead of it. So we should see a material tick down in government inflation numbers. So I think that's going to clear the way for much lower rates over the course of next year.
Okay, we have talked about the labor.
The brutal sell-off in crypto was hurting the top line of this company.
If it dropped to 45,000, Mike, I would be buying.
I'm a buyer here.
Okay.
I think if we enter, so if you look at the historical trading patterns, this should, like, in theory, we have entered a crypto winter. And in that crypto winter, like, your near-term low, or kind of, we should head to like below 40, to like 37, 38,000 should be the next stop if you go according to kind of the historical pattern of all the reversals. But we never really hit the upside in this last segment. So we should have tripled the 2021 cycle high, gotten to 180, 200,000. We never got up there, and I think a lot of that had to do with the government shutdown. And then if you look at the various things that have happened this year in like the software Mageddon or the SaaS apocalypse that we got last week, a lot of these tech stocks are fellow travelers, and it's that you have common ownership in between them. And so when someone's getting a margin call on their SaaS stocks, they're selling Bitcoin too, because look, in a risk-off environment, you're selling what you can, not what you want. And so a lot of time, and you may not necessarily be selling, you may be getting liquidated, right? So you get this avalanche. So it remains to be seen. If we see a sharp reversal in these AI names, Bitcoin could be back off to the races. So I'm not 100% convinced that this is the end of this kind of near-term cycle with Bitcoin, but we'll see.
Okay, I agree with you. I think overall, when we look back long-term, this is going to end up being a blip before we move higher, but we'll see.
And if so, is that the right decision by retail? Is this a cheap stock, a cheap sector to get into, or are we concerned that we're getting ahead of ourselves and there's a lot more to play out with the software AI dilemma that we haven't even seen the bottom of yet?
Oh, I think what you're seeing in this report and what's going on with software is exactly why retail has dramatically outperformed institutions for like the last 2 or 3 years.
Interesting.
Because it's the groupthink that goes on in the hedge fund community, in the buy-side community, will blow your mind. And like you see it where the baby gets thrown out in the bathwater. And a lot of that is due to something called basket trading. And it's, you know, so Morgan, Goldman, all these big banks will say, hey, here's a SAAS basket, which will be 10 SaaS stocks that you can just buy instantaneously and sell instantaneously. So like a specified ETF, but like you just buy the actual stocks. They'll just drop one ticket for you and sell it. And so people, a lot of these institutional investors are trying to play these for short-term pops in different directions on the upside and the downside. And so when they want to get out of these trades, you're all of a sudden you're dumping a bunch of names indiscriminately. And then again, you have the momentum algorithms waiting for movements. Yeah. And it's always more violent to the downside. And so if you can kind of ride the lightning and wait out these bumps, okay, you can make a ton of money over time. Unfortunately, this lightning is getting a lot more thunderous, and it's getting ugly. But I think this, you know, this SaaS apocalypse, this software Armageddon that we've gotten over the last weeks is one of the larger market overreactions I've ever seen in my career. But we are in a sell first, ask questions later from the institutional community at the moment. And there's also been an unbelievable amount of resistance near 7,000 on the S&P 500.
Yes, and talked about that.
Yeah, every time, even this morning, like we opened up big and then we sold off, and the same thing happened yesterday. And so every time we get up close to it, the sell orders come in and beat the market down.
Jackie, this is a note that stood out to me.
I'm not saying that everything fades to black, okay? But what I am saying is that these guys, of anybody, would seem to me to be the lowest hanging fruit for AI competition to go after. That doesn't make me bearish in the short term, but it does make me pretty bearish in the longer term. Now, granted, I'm the guy who picked Papa John's for our stock competition.
Don't believe a word this one said.
But that's my analysis. Where am I wrong?
Well, look, what I would say is that when, you know, there are ancillary software companies that don't add a lot of value, but like have their places in the marketplace. So I am not a huge fan from a user perspective of Salesforce, yet it's everywhere.
Right.
Right. And so the forward PE from Salesforce has gone from 45 to 14. Right. That's a pretty massive re-rating in that stock. But again, you have to realize that these software companies don't just stand still. That they're also utilizing AI to make their products better,
so
to
David,
make their margins better.
I want David to weigh in on that, because to me, Brian, your question is assuming that a CEO...
Here, Mike, we talked about Coke yesterday, Pepsi today. Coke was down. You know, there's a question about the future of businesses built on the kind of food that I like to eat occasionally, frankly, but are going out of favor. When you look at companies like this, what's your view?
So, you know, what's Coke's forward multiple? Walmart's got to double the multiple of Microsoft. Like they're crowded trades, like these consumer staples and these stocks have run. I'm not active in the sector, and for that reason, like, what's your forward growth, right? And like maybe you could try to transition into some healthier snacks and but these are expensive stocks. Yeah. That if I want to own something like that, like I'll put it in cash or fixed income. And if I want to take risk, I want to be rewarded. And hopefully it's a reward and it's no more SaaS apocalypse or software Armageddon. But that's, so like the entire food system is being completely reorganized in the US with the food pyramid coming upside down, people starting to take charge of their health, and with these GLP-1s, I'll also avoid the alcohol makers too. Because people are drinking a lot less, which I'm not necessarily in favor of.
Yeah. Good to know that. We could call it a sugar apocalypse, maybe. Taylor, you're looking at another one of my favorite things in life.
I'm as concerned about as the people working in that. Consumers are paying through the roof in these states. Why aren't they vulnerable politically?
Look, this is the leftist fallacy that somehow that 5% of the carbon in the atmosphere that's man-made controls the entire globe, and that we can somehow reverse trends that the Earth has been going through for billions of years. It's more delusional liberal thinking that normal people have to deal with the blow-ups. And like, again, somehow Gavin Newsom can destroy everything he touches and is seriously considered a presidential candidate. I know. Like only in America in 2026 can
we're still 3 years away from that. Mike Lee, great to see you for
Thank you very much.
Thank you so much for being here. Coming up.